Okay, so in this video I'm going to be talking about index funds, why they're good for beginners. I got a few questions about them on my YouTube channel and just directly, so I thought I'd make a video about it for anyone who had an idea of basically what it is and the returns on them, if they're passive, if they're actively managed, just everything that goes into an index fund, why I'm invested into it, and exactly which one I'm invested to. So basically all an index fund is a mutual fund or ETF that is constructed to track a certain financial market. So you have ones that track the S&P 500, and then you also have ones that just track the entire stock market. So you have, it's very diversified and it's a broad exposure to the market. This is going to be great for people who want to do long-term investments and a safe and pretty predictable return. Now this thing isn't going to get you rich, but it is a good thing to have as one of your investments. It's going to be long-term, so you're looking at about 10 years to hold it because things fluctuate in the market and it's going to be slow and steady. It's not going to be huge increases. It's not day trading, but that's also a pro. There's very little, it's basically passive. You put your money in and you forget about it. That being said, you have very low expense ratios, which is why I believe this is a great investment for beginners and just in general, because when you're looking at businesses and investments, you gotta look at the expenses. Even if you're starting a business, if there's hidden fees that can eat up all your profit. So when you have a low expense ratio, which is basically all the costs that go into the fund, so that's like paying the managers, everything. When you have a low one like that, which is very low in index funds, and the one I'm in, then you're keeping the majority of your profit. So that's a great reason to invest in index funds over actively managed accounts that they're paying their portfolio managers huge sums of money and it's really eating into your profits. So very low expense ratio, and it's very passive too. You just put your money in every month, which is why I like it. It's super simple. I don't have to stress and look at it every day and read reports and everything and earnings. I just put my money in, and yeah, it's basically, that's all you have to do. It's a really simple way to invest in the stock market. So another huge reason that I looked into it was Warren Buffett, one of the best investors just in history, said that he wants 90% of his estate invested into index funds. So basically, if Warren Buffett is saying that, I think that the everyday person should probably do that as well. So basically all that an index fund does is they try to mirror the market that they are tracking. So really index funds basically just mirror the financial market that they are trying to replicate. Index funds are a great option. I listed a lot of the benefits already, but there are a few cons that I realize, and there's reasons as to why I'm not putting a ton of my money into funds. I just kind of put a little bit of money every month into it. I want to have a safe, investment side. But there's actually a few cons that I want to bring up that maybe would make you even not want to invest in index funds at all. So index funds are vulnerable to market swings. So as you see right now, we're in a decline and stocks are going up, but everything's very volatile right now and things are crazy. So that being said, you could have been sitting very nicely at the beginning of 2020, and then a lot of accounts went down a ton, even 30%, some of them, from what I've seen. So they're very vulnerable to market swings, but it's still a good place to have your money, because things will get better and they will go back up. There's also the lack of flexibility. When you're trading in a fund, you don't really have control over what you invest in. It's kind of, you see what they're investing in, but that's about it. You can't really control the individual stocks that you invest in. So if you want to be in control of everything, a fund is probably not the best idea for you, because you don't really have the control at the end of the day. It's basically on the manager and the portfolio that they choose and that they build. So if you want to have absolute control over your investments, maybe go a different route than an index fund. This one is kind of, there's limited gains, right? So with the index fund, you're not trying to beat the stock market. You're just trying to replicate and mirror something. So if the stock market's down, your account's down, depending on what you're in. But you know, you're not trying to beat anything. It's slow, steady gains that are predictable, and you will make money in the long term. You may not make money right now, but in a 10-year average, you will make a profit. So there are gains, but you're not going to have huge gains in a day or a week or whatever. It's not going to be anything crazy. So don't go into this expecting to be like to make $1 million off, you know, a $10,000 investment. It's not going to happen, right? It's not like you're investing in like something that's very speculative and it's going to increase at a huge rate like that. It's not. And you won't probably get rich off this, but it's a solid investment to have just on the side. It's a long-term play for sure, and like I said, the gains aren't huge, but they are pretty solid for like a 10-year average. So there are cons, but the majority of index funds beat mutual funds and actively managed accounts. So you can put your money into a passive account that has a very low expense ratio because there's no actively managed. There's nothing to be managed in it, you know, it's already said and done. So if you put your money into this, you will beat the majority of the actively traded funds. So that's a solid thing right there, and you have the low expense ratio. So that's why I think index funds are they're just a solid investment. You know, they're very passive and the expense is very low. So what fund exactly do I invest into and why? I just went with a solid index fund, which is VTSAX through Vangaurd. I chose VTSAX for a few different reasons. I basically just read up on them. I don't really know too much about stocks, so I didn't really want to. I mean, I day traded for a little bit, but I don't really feel comfortable right now trying to beat the market and everything. Everything is a little crazy right now. Probably you've heard of Vanguard. It's a huge company. The fund's total assets are $822.41 billion. I can't even say, that's a ton of money. So it's a huge fund, and they invest in solid companies, with their top 10 being big companies that you and I definitely know, which I'll put up on the screen right here. I don't want to list them all for you, but you see that they're investing in great companies. So, you know, if you think that these companies are going to go up and you think the overall economy will get better, then this is a good, solid investment for you. It's definitely a long-term play, so don't go into it, like I said, thinking that you're going to make a ton of money short-term, and also don't think you're going to go into it making a ton of money long-term. It's just a good investment that gives a nice, easy return, and it's passive. So I hope this video helped you guys. If you would like to see more about investing, let me know. I'm kind of doing a ton of different stuff right now. I'm doing physical businesses, online businesses, and investing, so I'm pretty busy right now. But let me know exactly what you guys would like to see. Like I said, this was just a comment that I got, so I made the video about it. So if you have anything else you want to see, just drop it down below, or you can hit me up on Instagram. I leave it down in the description, and you can definitely message me on there and talk about anything that I put up on the channel and stuff. So let me know. I hope you liked it. Like I said, comment, like, and subscribe. I'm trying to get to 500 subscribers, so help me out with that, and stay tuned for the next video.